So I'm mainly going to be focusing on what's known as dollar cost averaging. And so for those who do not know what dollar cost averaging is, stick around and we will go through exactly what it means. Now, in addition to my dividend-based portfolio, I'm going to be mixing up my YouTube channel a little bit more. So on the screen, I have an article from TechCrunch, and each week I'm going to be looking into a form of information that is somewhat related to investment, if possible. And so we'll be discussing this article later on. It's about Sundar Pichai becoming CEO of Alphabet and the recent effects it's had on the stock market. Okay, so for those new to my channel, I focus primarily on dividend-based investments. Now, within my Trading 212 ISA account, you can see that I recently purchased the Walgreen Boots stock. And so that is the only stock I have currently right now. But I will be buying a lot more stock in the future with the free funds that remain. So that's a very short update because there's not much to talk about. So let's get into the main topic, which is that of dollar cost averaging. And so all it really means is that when you have a set of free money, and so for instance, in my case, I have free funds ranging slightly under the £400. And what I can do is just either use all of the funds or a subset to buy into one or more stocks at any moment in time. So we have Google Alphabet on the screen here, and we have the price chart from the last few years. And so all dollar cost averaging is a technique to average the cost of the stocks that you buy. And so let's take an example. Let's just say we had $5,000, and so we buy a share of Google Alphabet at slightly under $1,000. Now, as time goes by, the price increases, and let's just say we buy the stock when it's at this peak, so $1,200. So in this case, we have roughly slightly over $2,000 that we've spent on 2 shares. And as time continues to go on, the price dips, increases, and so forth. And at any moment of time, you can execute orders, assuming you have enough money, and the price that you buy becomes the average of all those upper and lower points. And so dollar cost averaging is a really good technique to really flatten out the price. And so for individuals that are unlucky and they time the market badly, if they buy when the price is high and they subsequently buy when the price is really low, they get the average of the two. Now you can take this technique even further, and keep in mind with the case of Alphabet Google, the prices are really high for a given share, but for instance, we could buy fractions of the share as well at a much lower price point, and it would enable you to perform dollar cost averaging much more effectively. And so all you really need to do is think to yourself, when do you want to buy a fraction or one or more of a share? And so let's just say you plan on buying shares once a month. And to make it really simple, on the first of every month, you buy a fraction of a share or one or more shares. And so if you had enough money, or if you could just buy fractions of the share, which you can on the Trading 212 platform, we will be buying at every single month. So on the screen here, we can see that we have 3-month intervals, but if you were to continually buy every month, the price that you buy the shares will be averaged out much more finely. And so dollar cost averaging is a great way for you to stop worrying about whether the market is that of a bull market, which is one that just goes lower to higher, or one that's in a bear market, which is one that goes higher to lower, which is really good because as dividend-based investors, we are happy to hold onto the underlying asset. And so when we buy month by month and we accumulate more of the underlying shares, provided that the share is a dividend-based share, then we know that the underlying asset will also pay out the dividends on top. And so in my case, for instance, there's been many times where I've held off of an investment because the market has just been too high. And then when you look, say, 3 months down the line, you look back and at least in recent times, you generally think, oh, I wish I bought the stock when the price was much lower 3 months ago. And so a technique with dollar cost averaging really separates you from what's happening in the market, and you can periodically and repeatedly invest into the market. And the outcome is that you receive stocks at an average value. Now, what you really need to keep in mind is that for dollar cost averaging to really take place, you need to buy a given stock frequently. And so if you plan on buying a lot of other shares into other companies, then you really want to dollar cost average all the other shares as well. Now, in practice, we don't have infinite amount of money. And so some other techniques that we can employ is that for a given share, we can think about how much we actually want to allocate compared to the overall portfolio. So I've just switched over to my invest account just because I have more companies invested, and we can see on the account value at the bottom, if you just click down here, we can see the given company name and the amount that we've allocated into our portfolio. So by far, Realty Income is the highest weighted, and I have 43%, and the one below that is HSBC at roughly 30%. And so what you can do is, as you continue to dollar cost average, you can have a look at the numbers down here, and let's say you have in mind you just want 20% allocated to the first company, and then you can work your way down as you buy into other companies, allocate whatever it may be, let's say another 20%, and continue to dollar cost average. Once you hit that 20% mark, you can just move on to additional companies. Now, at the same time, if you just want to buy a company, buy another one, and then buy more shares at a later date, then you can do the same thing as well. But do be aware that you may want to really spread your risk by weighting each company to a number that you feel comfortable with. Quick announcement. Are you interested in starting your own investment journey and want to receive a free stock worth up to £100? All you have to do is create an account and deposit £30 or more. Trading 212 is available for European residents also, so head over to the link in the description. So that's all there is really for dollar cost averaging. Now, I used Alphabet Google because it does have some highs and lows in recent times, but all in all, the stock price has just been increasing. Okay, so I'm just going to zoom into the graph a little bit more. I want some finer detail. And we can see around early December, we had a price point around $1,280, and the price currently is around $1,430. So we've had a price increase of slightly under $200 in the space of a month. Now, markets do fluctuate, and sometimes there's no underlying reason whatsoever, but I want to focus our attention on the news in which the previous CEOs, which were Larry Page and Sergey Brin. So Sundar Pichai is now the CEO of both Alphabet and Google. So in the past, we had Larry Page and Sergey Brin, who were initially CEO of Google prior to the company expanding to have Alphabet as the parent company. But Larry Page and Sergey Brin are no longer CEO of Alphabet. The title of CEO is Sundar Pichai, who is now CEO of both Alphabet and Google. Now, the TechCrunch article is very positive of the news, and I am as well. I think Sundar has done an incredible job with Google. It's taken the company from strength to strength and really catalyzed on all the hard work that previous members have done in the company. And so for those who invest into the likes of Google, the company is in very safe hands with Sundar as CEO, and he really hasn't put a foot wrong since he became CEO of Google back in 2014. So the stock markets have, as expected, been very positive. The price in the last month since this news broke out, and so this news came out a couple of months ago, and the stock price has been very positive. So I'm definitely interested to see what happens with Google in the future. I think it'll be the same as it has been recently, which is good. And in terms of Sundar being CEO of Alphabet, I'm very curious to see what other types of divisions stay and go, given that Alphabet has a whole range of different companies that they trial and see and experiment effectively. So hopefully it's clear to you what dollar cost averaging means, and you should all be able to apply this investment strategy into your daily lives. And so in future, I'm just going to pick a random day of the month, and I'm going to be making sure that any funds that I put into this account are translated into dividend-based companies that I like to hold. And I'm going to focus less on whether the stock price will drop in the near future. I'm just going to execute and buy the stocks that I like. And even if or when the stock price drops much lower, then I can just buy more of the shares because they will be on sale. So with that said, thanks for watching, and I'll see you in the next one.